Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to do our daily technical analysis update of commodities. We're going to work our way through the dollar, 10-year yield, or I should say yields, precious metals, and commodities and ETFs that I follow. Again, I'm going to give you my financial opinions, and definitely check out finding-value.com if you guys are needing help with this commodity bull market and finding companies, technical chart patterns, all that stuff. It's all on the website. We do have a platinum question and answer session coming up tomorrow on Saturday, 7 a.m. Mountain Standard Time. If you're a platinum member, you can join and I'll see you there. So let's dive in. We've got the DXY. The DXY is bouncing off this support level. So I drew this in a long eons ago. Lots of the times what happens is you get a double bounce on a support level. So we've come on up. We've come on back to that support level, and sometimes we can see a surge higher in a short-term move. So that is looking quite interesting for the dollar here, that we could get a bounce to the upside. There's that big longer-term support level going all the way back here that I have drawn in at a bunch of different support levels that we are coming back and hitting and back testing. Could this run higher? Yes, it could. Maybe this is wave one, this is wave two, and this is wave three beginning to occur in the dollar, which might also correlate with yields. It might. Obviously, no one knows for sure, but we're back up against that support level for the DXY. Now, yields are heading higher here. So we were looking at, is this going to break down or is it going to break higher coming to this support level? It looks like, as of right now, that we are ready to break higher in yields. Surprisingly to me, I thought we were going to roll over and potentially head lower, but yields went higher here. So it's actually looking good for a move higher, which actually supports more inflation or an inflationary environment, and maybe even supports higher oil prices. Remember, this prices assets differently depending on what the 10-year yield does. So we've got kind of this, breakout to the upside there. I know it's not a strong break there. It's only two points, but this to me looked like it was going to be a Batman pattern where we could potentially head lower. But again, we are heading higher in yields. That also is seen in the 30-year yield. We came back, touched this support level, and we're starting to bounce higher. Are we going to go higher, or is this thing going to go lower? I still think that the markets are in an indecisive state on where yields are necessarily going to go in the short term. So bond prices, they move inverse of it. They're backing off today. This is a resistance level that we've been hitting, and it's backed off to the downside for bond prices. So yields and prices moving in a direction that I'm a little bit surprised at the direction that this is going in the short term. I thought yields were going to head down in the short term. So looking at the TYX-TNX ratio, it does look like we could come back further. That is a bearish engulfing pattern there on this ratio. And with the dollar being up and yields being up, gold is not going to like that. Now, we could have got this original surge in gold. We could probably go sideways for a little bit before heading higher. That is also a possibility. We saw that much like it did in the late 2000s, 2005, 6, and even into 7. It did that same type of movement where we went sideways for a little while. That could be something that we're doing with the ratio and with yields. We can also look at the 2-year yield here as well, where we could head higher in the short term. I drew this a while back where I said, maybe this is a shoulder head and a potential shoulder that develops and then rolls over. That is a possibility. So, and remember, the reason we're looking at yields so much is because yields determines the pricing of a whole bunch of different assets, basically all the assets. So when yields go up, the stock market does not like that. Most of the time, gold doesn't like that either. Not all the time, but most of the time. And it prices these assets and tells us the market conditions. So CRB index slightly higher. The CRB index looks fantastic for a move higher here, guys. It's been moving higher, and it's breaking through resistance levels, and it's actually looking quite good. So that's good. The CRB to S&P 500 is firming up again. Maybe we're due for a run higher here over this summer. And keep in mind, we have supply problems in a lot of commodities that are materializing this year. Oil, we've got copper, we've got other minerals like aluminum that are also going to show up with supply deficits. So that could be having an impact here as well. We've got gold heading lower today, getting a little bit more selling pressure. But again, we're sitting on top of a lot of these support levels. So even if we were to come back down, that's not, we've got support right underneath us. So I wouldn't necessarily be too worried about it. Yeah, it's a little bit of a larger down day today, and we might have a little bit more downside in the short term, but longer term, it doesn't look too bad. It still looks like it's intact from a weekly and monthly basis. Silver also heading lower, getting a little wick at the top on the weeklies. We could head back or go sideways for a period of time to consolidate a little bit. We've had a monster run in a lot of these metals. And platinum not really selling off too much. This actually looks really bullish for platinum. So we could see a continued move higher here in platinum if it wants to break through this downtrend line and really start to take off. I'm hoping that's the case. I hope platinum decimates gold and silver in the short term, because then I can swap some metals over, rebalance the portfolio if the platinum to silver ratio really starts to move and get to a very overbought level, or a level that's very high, where platinum can buy a whole copious amounts of silver, if it were to do that. XAU to gold ratio, that one is also going down a little bit, but it didn't really go down that much, 0.15%. So the gold and silver mining companies are holding up quite strong in relationship to gold being down quite a bit. That is some good positive signals that people are still believing in the gold and silver miners at this time. So GDX down 2.17%, just a hair more than gold itself, still looking all right. SILJ also holding in there, down 2.82% when silver's down about 2%. Again, we're still above these breakout lines. And what do we normally do? We break out, and then we do a retest, and then we usually take off. So we're probably going to put in some retests, probably maybe consolidate sideways for a little bit, which is a possibility of what could happen next. Crude oil heading a little bit higher. Crude oil is still looking quite strong. This does not look weak. And the increasing interest rate environment doesn't really bother crude oil and natural gas. It's kind of energy's best friend, because other sectors kind of pause and then money rotates into these. So that's looking good for crude oil, the commodity itself. Natural gas does look like it's trying to put in some sort of bottom here. The patient investor, if you guys are patient, I think natural gas is a good spot to be looking. And then XOP, yeah, you know me, I'm still indecisive on what to do here, because we've got this trend line that has broken to the downside with good selling pressure here, and it's taken a little bit more trading days to come back up. Could this roll back over and hit like $100, which would be an incredible entry point if it were to do that? Somewhere in this region of $100 is a great spot to be adding if it gets down there. I don't know if it's going to go down in the short term or what the next step is here. It looks like to me that it could obviously come back down, but seeing yields go higher, seeing the dollar go higher, that doesn't necessarily hurt oil too bad, and oil doesn't look bad itself. Interesting mix here with the commodity looking good, but XOP looking kind of iffy. OIH also getting, it's got the selling pressure here. It's coming on up. Still looks like to me like we could go a little bit lower in the short term, but I mean, that's what it looks like in this. We've got lots of selling pressure. It's struggling to come back up, and it does look like it wants to roll on over and do another kind of bottom. But crude oil itself, that looks strong. So we've got a divergence here between the commodities themselves and the equities. Spot Physical Uranium Trust, that also kind of looks like to me that it wants to roll over a little bit, much like the energy sectors that we were just looking at there. So that's interesting. Uranium also getting a little bit more selling pressure. This is a bearish piercing that generally heads a little bit lower in the short term. We are dueling it back and forth between buyers and sellers here. TAN selling off a little bit, but that's still basically just squeezing up. Doesn't look that bad to me. Everything's intact. Copper down slightly. Nothing really to worry about here. It's had a monster jump here. So that still doesn't look that bad. It still looks good. Lithium slightly higher, right against its resistance line. So we'll see what happens there. REMX also against resistance. So that's trying to duel it out against this support resistance line. The S&P 500, it's a small down movement here. So let's see where that white line's going across here. So what we have here is that resistance line going across here that we're trying to break out of. And you can see that there's resistance there with today's little selling pressure, but it's a bloody nose. It's a continuation pattern higher. So that doesn't look too bad. Same with the NASDAQ. It's just a little bloody nose today. Still looking good. So that doesn't look too bad. Emerging markets, again, slightly lower. Doesn't look bad. Still looks like it's in a grinding up phase. You could also say that we've got an inverted head shoulder that's ready to break to the upside. You know, it doesn't look bad. Everything looks good. XHB is still holding in there, looking strong. Doesn't look bad. Moo is below this trend line. Is this going to roll on over? This is in the same situation as OIH and XOP. Are we going to roll over and URNN? Or is this going to get another surge to the upside? I'm in the rollover camp. Maybe it goes sideways to slightly higher for the summer, spring, summertime, but I still think we've got that possibility of yields rolling over and kind of everything rolling over at some point. Copper, slightly lower, bloody nose, still looks good. Lumber, higher today, still looks good to go higher. Iron ore, slightly lower. This does still look like it's in a pullback. Again, I think it's going to pull back and do a retest move somewhere down in this range down here. Maybe slightly lower than where I circled it. Nickel, moving sideways. Looks like it's trying to hold on. Aluminum, again, I'm a huge aluminum bull. Back half of 2023, we're just grinding sideways here. Baltic Dry Index is also grinding sideways, but looks very good from a longer term perspective. Newcastle coal, again, I think we got to grind sideways. It looks good though. I like that we've got the big green candlestick, the two small down days on the weekly. The dailies here, you can see how we popped higher and we're just moving sideways. Not much selling pressure there. I remember natural gas is starting to firm up too. I do think that we could see this move higher eventually with natural gas. And then we've got Ethereum. Ethereum's just blitzing higher. That looks really strong. Same with Bitcoin. Bitcoin's still looking really strong from this inverted head and shoulders that's broken out to the upside. So that's what we've got for today, guys. Couple of interesting dynamics with the commodity looking strong, and then the ETFs and the equities kind of looking a little bit more rollover. What I do when I see that is I don't really do anything. I just hold on. I'm a definite huge bull on the longer term time frames in all these commodities. Big time bull. But unfortunately, we're getting mixed signals in the short term. And interest rates were at a spot where it's kind of indecisive. I still think that interest rates can maybe go up in the short term, create that other shoulder, and then roll over and head lower. That's my guess. I don't invest off of guesses. I invest off of what's cheap and based off of what ratios are telling me. And the ratios are telling me that natural gas is dirt cheap. It's telling me that crude oil is cheap. It's telling me that gold is cheap. It's telling me silver and platinum are cheap. It's telling me that these are the areas that we should be in, and uranium. They're all cheap. But in the short term, we could see some volatility moving on up and moving on down based off of what the charts are telling us, because we're up against resistance. We're underneath that resistance where we could roll on over, and that's very interest rate sensitive. Although, which complicates the whole matter, is we've got a lot of supply problems coming. So the question is the interest rates going to drive the pricing? Or are the fundamentals and the supply problems going to drive interest rates? Does that make sense? You're going to have a battle between interest rates trying to price assets and then the actual physical commodities that could go short. But keep in mind, credit expansion and contraction has an input on demand. So we're playing with demand and supply, and the two factors are the credit expansion from the demand side going up, which will demand more supply of commodities. If that goes down, then your demand will go down of those commodities. But if you've got supply going down or becoming constrained on the commodity side, now you're battling the destruction of demand and the destruction of supply at the same time, which could also impact interest rates to move on up because it could still be inflationary in that stagflation type of environment. So it's an interesting dynamic. We'll see how it plays out here. I think we need more data to basically say which direction we are for surely going to go. We could go sideways to slightly higher in yields for the next month or few months and then roll over. It could be 3, 4, 5, 6 months even. So the timing here in the short term is going to be a little bit tough. We could see gold kind of move sideways, digesting that increase in interest rates, consolidating on top of these big breakout kind of launching pads, consolidate up there for maybe a little bit, and then launch again when those interest rates roll over. That's a guess, but we'll see. But that's what I've got for today. Thumb up for the content. Don't forget, we've got a 7 a.m. Mountain Standard Time tomorrow, Platinum question and answer session. Love to see you there. Love to have you a part of the community. And we'll catch you guys later. This is Finding Value.